Another month, another fact sheet. In the month of April, markets seem to have found their footing again after a month of uncertainty and sharp swings. Global investors continue to keep a close watch on geopolitical tensions and macro developments, but this month also brought back something that markets had been missing for a while: confidence. The ongoing Q4 earnings season has largely reinforced the strength of domestic businesses, with several sectors reporting resilient earnings despite a challenging global backdrop. And now, this month, we want to take a step back and also talk about something equally important: the thinking and the process behind each of our PMS products. Because long-term investing is not just about monthly returns. It's about understanding the philosophy, discipline, and the structure that drives those outcomes over time. Across all our strategies at ithought PMS, the objective remains the same: to build portfolios that can navigate volatility, participate in growth, and stay resilient across market cycles. Starting with Solitaire, our flagship flexi-cap strategy designed around high-quality businesses with strong cash flows and low debt. April was a constructive month for the portfolio, with the strategy benefiting from the broader recovery in equities while continuing to maintain its quality-first approach. The portfolio remains well diversified across sectors such as FMCG, financial services, automobiles, capital goods, and healthcare, with a strong bias towards debt-free businesses and companies with durable competitive advantages. Even during volatile phases earlier this year, Solitaire's lower beta profile helped contain the downside risk, and as markets stabilized, the portfolio continued to participate steadily in that recovery. The strategy remains focused on delivering consistent long-term compounding rather than chasing short-term momentum, with performance being as follows: 1 month at 10.44%, 1 year at 4.16%, 3 years at 18.84%, and since inception at 19.62%. Moving on to TRUBLU, our large cap strategy built within the Nifty 50 universe. We call it the bluest of blue chips. The portfolio continues to focus on owning stable market leaders while consciously avoiding businesses where long-term structural risks remain high. During April, large caps saw renewed investor interest as markets moved back towards quality and earnings visibility. TRUBLU benefited from this shift, supported by its exposure to sectors such as financial services, FMCG, automobiles, and energy. The strategy continues to maintain a relatively low volatility profile, helping investors participate in equity growth while managing downside risk more effectively. In such uncertain markets, TRUBLU's disciplined large cap framework continued to provide stability and consistency, with 1 month performance at 6.93%, 1 year at -4.09%, 3 years at 9.82%, and since inception at 9.56%. Next, coming on to VRDDHI, our small and micro cap strategy. April brought a strong recovery after several months of pressure in the broader small cap segment. The strategy delivered an impressive 19.04% returns for the month, significantly outperforming the benchmark return of 10.38%. While shorter-term volatility continues to remain a feature of the small cap universe, the portfolio's longer-term philosophy remains intact, focusing on emerging businesses with leadership characteristics, strong governance standards, healthy cash flows, and low debt. Over 3 years, the strategy has delivered 14.9% CAGR, while since inception, it has compounded at 17.81%, comfortably ahead of the benchmark. The portfolio currently has nearly 59% allocation to debt-free companies, 65% allocation to market leaders, and almost 44% exposure to businesses without external research coverage, reflecting our private equity-style research approach. Sectorally, the portfolio continues to maintain exposure across agrochemicals, infrastructure, chemicals, capital goods, real estate, and pharmaceuticals, positioning it well for long-term growth opportunities. Next is our very dynamic multi-asset strategy, Sphere, that allocates across equities, debt, global assets, and precious metals, depending on macro opportunities. In this market, we definitely did find a great opportunity to exit precious metals. And April once again highlighted the importance of diversification, with Sphere delivering a strong 7.56% return for the month, ahead of the benchmark return of 5.65%. Over the last year, the strategy has delivered 16.88%, while over 3 years, Sphere has compounded at an impressive 25.74%, significantly outperforming the benchmark. The portfolio currently maintains broad exposure across banks, financial services, consumption, a little bit of precious metals, global assets, and select cyclical sectors. What continues to differentiate Sphere is its flexibility, the ability to move across asset classes depending on where opportunities and risks emerge. In a market environment where leadership keeps shifting, this adaptability continues to play a major and a very meaningful role in delivering smoother long-term outcomes. Finally, NEO, our multi-asset strategy designed specifically for NRIs, also saw a strong month, delivering 7.97% in April, comfortably ahead of the benchmark return of 5.65%. Over the past year, the strategy has generated 8.06%, while since inception, it has delivered 20.45%, significantly outperforming the benchmark. The portfolio remains largely equity-oriented with strong allocations to banks, consumption, financial services, automobiles, and metals, while also maintaining diversification through global and liquid allocations. NEO continues to be structured for investors seeking long-term participation in India's growth story, while maintaining a balanced and globally aware framework. So overall, April served as a reminder of how quickly market sentiments can shift after phases of uncertainty. More importantly, it reinforced the importance of staying invested through volatility rather than reacting emotionally to short-term corrections. Across all our strategies, Solitaire, TRUBLU, VRDDHI, Sphere, and NEO, our focus remains unchanged. Disciplined investing, quality businesses, thoughtful allocation, and long-term wealth creation. As markets continue to evolve through changing global and domestic conditions, we remain committed to navigating them with patience, research, and conviction, and also meaningfully create wealth for all of you. So if you would like to know more about ithought PMS's product universe, get in touch with us at 9500027285, or you can also click on the link in our bio.